Scalping trading. Today we are talking about the second trading plan that I use. There are only two of them that I use. One that I use, I already made a video yesterday. You can look at that. And this is the second one. The second one is when I use after the fact, after the channel opens, and the first trading plan is when the trading plan I use is when the channel actually opens. At the open of the channel, what I do. Right. The second one is when I use after the fact, after the channel is opened, and how the price action reacts with the channel is when this trading plan kicks in. So I'm not really obligated to sit there using one trading plan because one thing didn't work out and now I'm just the rest of the day is gone. What I do is I use this trading plan. Say for example, um, I'm at 12 o'clock or something, and then somewhere about here, and then I put a some kind of alert here, and then when the price action hits it, I get notified and I start looking at it. And as soon as I see something like this, a candle that's like a hanging man kind of candle, then I know I'm going to act on it, that kind of thing. So this is after the fact. Okay, so just to quickly go over the trading plan again. Every trading plan should have an entry criteria, stop loss, a profit criteria, and a max loss per day. Excuse me. So the entry criteria is you are the entry points are always. If you really want to be successful, you have to have uh, identified key entry points on your chart. And in my case, the key entry points are the channels. Okay, so entry point only are the key entry points, and the the candle structures that I follow. For the long, it's hammer, positive, engulfing candle, the large positive candle. Like something like this would be a large positive candle. It's also engulfing, but I was saying this is also something like this is a large engulfing candle that opens at the very bottom, closes at the very top, and it's very positive compared to the rest of the candles around it. It looks big, so that's very positive, right? That kind of thing. But that has to happen or occur at the key entry point for this to be valid. So that kind of thing. And then for the short, it has to be a hanging man or a negative engulfing candle or the large negative candle. And the only time I would enter is, after I get the something like this that penetrated the channel, came out and closed outside of it, and this is a hanging man candle. I would enter 2 cents below the low of this candle, right? So that's my criteria for entry. And then the stop loss is always 2 ticks above, because this is the entry candle that I used. 2 ticks above that is my stop loss. Even though my entire channel is here, it could still break out of it, but I just would get out of here because that's my trigger candle. Okay, and the profit criteria is basically I always enter with 2 contracts or 4 or 6, depending on how I'm feeling about the market on that day. But for all entry level people, I would say enter with 2 contracts, take profit on 1 contract after 4 or 8 ticks, and then the second contract you just let it run and move the take profit, the stop loss thing to break even and then keep it moving. Okay, and always have the max loss per day. As I said in the previous video, I don't know what your pain point is, but the point should be that you're not depressed and you're not pissed off for the rest of the day. That should be your um, max loss per day. In my case, it's about 5%. If I lose 5% of my account, I'm still okay because I think I can recoup that in a couple of days or a day or whatever. But I could live with that. Anything more than that, I'm not myself. So that's what it is. So okay, so 2% or 5% of the account or whatever is the magic number for you. Figure that out and keep that in mind. Okay, the whole point is to survive for the day and then come back next day, because once you know this trading plan works, you can always come back later and make it happen, right? You don't want to be out of the market by wiping out your account because you didn't follow your trading plan. And as I also said before, trading plan, the only reason why you don't follow your own trading plan is you don't trust it. You don't trust yourself. So always go back and build that trust. And how do you build that trust? You have to go back test it. And how many times it works, how many times it fails. You kind of know what works and what doesn't. So that's very important to test. And once you follow your trading plan, you'll always be successful, guaranteed, because you're restricting your stop losses, you're restricting how much you're going to lose per day max, and also what your profit criteria is and what your entry criteria is. You cannot lose after that. I guarantee 99% of people who lose all their accounts is the ones who don't follow their own trading plan, or they don't even have a trading plan. Even if they do, they don't trust it, they don't follow it. So all those issues will be gone. Trust me, I've been there. So I'm just telling you, it would be helpful for you if you follow that. Okay. Hopefully this is helpful. If you want to see more videos like this, please subscribe and press the bell icon.